All right, everybody. Welcome back to Strongman Personal Finance. My name is Christopher Bell. I'm a certified public accountant. I'm a long-term boglehead investor, a real boglehead investor, not like this dork right here. I'm author of the book Stop Being a Broke Loser. And I'm not a big fan of this YouTuber, Jarrad Morrow. Now, one of my subscribers brought him to my attention. And in one of his recent videos, he said, how I'm investing in 2022. Now, I'm not going to be too harsh on this guy because at least he pushes index funds, okay? That's better than most YouTubers. I know he has a Patreon. We'll go look at that in a second. But he doesn't charge too much for it, and he pushes index funds. So he's probably a net positive overall. However, he is horribly misguided when it comes to long-term boglehead investing. As a matter of fact, he kind of has a clownish portfolio. So let's watch this guy's video, and I'm going to point out some massive flaws in his investing strategy.
Zero individual stocks, and holy smokes does it feel good. Right before the end of the year, I offloaded the last few free shares that I received from Robinhood over the past couple of years. For whatever reason, I'm less likely to pay attention to or even worry about the price of an index fund ETF that I own, which is one of the big reasons that I prefer that asset class over all of the others.
You actually do care about index fund prices because, well, we'll get into it, but International did bad, even though I don't care about ETF and index fund prices. International did bad, so I can't buy International.
The only investments that I hold right now are spread between the S&P 500 and Total Stock Market Index Fund. Can anybody say boomer alert?
Can anybody say clown alert? Okay, so he holds two index ETFs that both track the US stock market. One of the dumbest things you could do is have the S&P 500 index and then also have the Vanguard Total Stock Market ETF. Both of them are US-based indices, and they basically track, well, the S&P 500 is roughly 80% of the US stock market by market cap, and the VTI ETF is, these freaking commercials, the VTI ETF, the total US stock market, tracks the entire US stock market. They're basically the same freaking thing, okay? There's no diversification by buying VOO, the S&P 500, and by buying VTI. As this amazing chart shows right here, VOO, the S&P 500, has 508 of the largest U.S. stocks, 80% of the U.S. stock market. And VTI also has VOO with a little bit of small cap. So if you buy both, you're just overlapping large cap stocks and underweighting small cap stocks in the United States. They're basically the same freaking thing. And if you track their performance, they're basically neck and neck. It's the same freaking ETF, okay? Same freaking thing. The only difference is VTI has some small caps. So if you buy both, you're basically just cutting this in half. Wow, Jarrad, that's a really smart portfolio. But let's see more.
I'm a big fan of the three-fund investment portfolio. I haven't actually started holding international stocks or bonds yet. Link to check out that video is above my head and in the description of this video. But this year,
you're not buying international. I wonder why.
I've decided to start allocating a portion of my money into an international ETF. Yes, I'm finally going global, baby.
Prestige. Worldwide. Why?
It's taken me a while to get.
I mean, he is nice and like homely and friendly. And he's got, blue eyes that just stare into your soul. I want him to make sweet love to me. No, I'm just kidding. Anyway, let's see why he's not a fan of international stocks. I wonder why. Maybe it's because they haven't performed well over the last decade. But no, he's a long-term investor, bro.
To a point where I want to add them into the mix because I just look back at how US-based companies have absolutely clobbered international over the years. For the longest time, I've convinced...
Over the years? What are the years, Jarrad? You're such a genius, bro. What are the years? Let's go look and see the years, okay? So here we have this beautiful PowerPoint by Fidelity. And there's a myth right here. Myth 2. Now, it's not, I wonder what myth number 1 is. International investing is too risky. Oh, yeah. Myth 2. U.S. stocks usually outperform foreign stocks. So here we have this little chart here. And basically what it does is it shows you time periods where international stocks freaking annihilated U.S. stocks. And it almost looks like it's a cycle. So if you see the little spikes going up, those are time periods that international outperformed. If you see spikes going down, that's when US outperformed. Isn't that a little crazy? If you go back to 75 to 79, 83 to 88, 2003 to 2009, international outperformed. But Jarrad, in all his geniusness, has looked and said, well, from 2010 to now, US stocks have outperformed. Therefore, I cannot buy US stocks or international stocks. Interesting. Let's hear more.
Myself that I don't need to add international, because if I own something like the total US stock market index fund, then I'm kind of already investing internationally, because a lot of the bigger stocks do business, of course, globally. While that technically is,
they do, but that's still not enough international diversification, okay? You're putting all your eggs in one freaking basket. One country, one stock market, which I'm going to show you in a second is a freaking terrible idea. Even the United States, bro.
Is true, I'm still missing out on the true international stocks that are located outside of the US. I've definitely become a victim of home country bias. It's when an investor looks at investments within their own country as superior to anything outside of it. Could international
Because they went up, bro.
continue to underperform the US? Absolutely. Will that most likely cause me to miss out on some of the upside? Absolutely. But I'm willing to give up a little bit of that potential juice to diversify my overall portfolio more than what it is right now. Just to be
Oh, it's just a little juice, bro. Just a little squeeze. Now, Jarrad, let me show you something, okay? Where is it? So, here I have a chart of the Nikkei Stock Market Index, the Nikkei 225. Now, there used to be this massive bubble in the Japanese stock market, where you see here, goes from the 70s all the way to about 2020. Now, look what happened to the Japanese stock market. It's the future. Japanese stocks will always outperform. You see it massively freaking rocket up to 1990. Now, if you were like Jarrad, I just don't want to give up some juice. I don't want to give up some juice. You know, I might miss some juice, but it's fine. And you only bought Japanese stocks because Japan is future, bro. Look what freaking happened. The stock market crashed, and oh my God, it still hasn't recovered from 1990. This is what happens when you put all your stocks in one country. I used to be like, oh, US is the only thing that matters. And then I looked at this and I was like, this doesn't make sense. Why would I put all my money in a country when potentially this could happen? It could 100% happen. Now, if you listen to this clown, and I'm not going to be too harsh, like I said, because at least he pushes index funds. Do half VTI and half VOO, even though it's the same thing and it's all in one country. This could freaking happen to you. Where is it? I lost it. This could freaking happen to you, okay? You don't want this to happen to you. Let's keep watching.
Clear, I'm not allocating a large percentage to international at this point in time. Heck, in my top 5 Vanguard ETF video, I mentioned how I would personally avoid the Vanguard Total World ETF because it holds 40% international, which I think is absolutely...
See that? Is that VT up there? Our genius Jarrad Morrow doesn't like VT. Because instead, he'd rather own VOO and VTI, which is the same thing. And he'd rather put all his money in one freaking country because I might miss some juice. Even though, you look at Japan and look what freaking happened, but whatever. And let's go look a little about the world economy. So this is the gross domestic product of all the major countries in the world, okay? Now you see here, the United States produces 24% of the world's GDP. What year is this? 2019. Oh my God, it's 2019. It's old. 2019, it was 24% of the world's GDP. You also have China, 16%. Rest of the world, Japan, 5.8%. Germany, blah, 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 blah. As you can notice, the US is basically a quarter of the world's GDP. Now, you go look at VT here. Region allocation. 63% of the world's stock market, the world's market cap in the stock markets, is in the United freaking States, okay? We could potentially be in a massive freaking bubble. Think about it. Look at the GDP. 25% US, 62%. Now, the reason I own VT is because I can't predict the future. I let the world sort itself out. If the US market's massively overvalued, then so be it. If the US market corrects, I'll keep buying VT. International stocks will be a higher percentage of VT, and I'll buy international stocks. But I'm also exposed to the entire world at market cap weights. I'm not timing the market at all. As opposed to, well, U.S. stocks did good, and this could never happen to the U.S., and international's dumb, it's never outperformed, and I'd rather just own the same ETF, basically. Jarrad, you're really impressing me here, buddy. And of course he dumps on my VT, because he's a genius. He just knows that international's bad.
Absolutely bananas. For now, I'm going...
It's bananas! But, you know, this, 25% of the world's GDP, but 63% of the world's market cap in stocks. That's bananas!
I'm going to rebalance my retirement account so that 5% is international, then slowly get up to probably about 10 to 15% at some...
This is the definition of freaking garbage portfolio, okay? I'm trying not to be too harsh, but this is freaking bad, okay? And of course he has 67,000 subscribers. This is freaking garbage, okay? And of course he has a Patreon. I mean, he's not charging that much. I mean, of course he's got to try to make his money. Maybe I need to do a freaking Patreon. I actually made one, but I never freaking, like, activated it. I need to start grifting, too. But here he is charging $5, $7 a month to teach you to buy the same ETF, to have you ignore this reality versus this reality, to basically not buy international because the juice, the squeeze, blah, 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 and basically get your cheeks clapped, all right? This is Jarrad Morrow here. So, I mean, you can subscribe to him. He's a friendly guy. Damn, look at his channel take off. So, me and him actually had the same number of views for all of at the end of December. Then he freaking exploded. I don't know what he did. But he's definitely a larger channel than me, so he must be smarter than me, right? Anyway, that's it. Like, subscribe, tell your friends about me. Buy VT, and have a wonderful day. Cheers!